Let's get to another money manager's take on today's market action. We're joined by Rick Bensignor. He's the chief market strategist for Execution Noble. He's also the editor of the New Thinking in Technical Analysis, Trading Models from the Masters. What a catchy title, Rick.
Well, we worked hard on that.
I can see you tried to fit that into like 144 Twitter characters. All right, so what are you fitting into your model right now? You're taking a look at what the Dow and what the S&P is doing, the dollar, mix it all together. Give us your outlook. I know you're Mr. Inflection at one point. What's happened now? We had another inflection point?
Interesting you say that. Dollar yen today hits 82.78. Third time since May that pair trade has hit its 50-day moving average. It backed right off from it once we hit it today. I think if you can get through it and stay above, you could get a shift in the dollar here that most people are not expecting.
Everyone is short the dollar. Everybody is long the euro, long the yen. They say the greenback's over, and you're saying maybe that's a little bit of a crowded trade?
It's definitely a crowded trade. It's also the right trade so far, and there isn't much to fight that not being so. But we tend to look at the markets from a behavioral point of view, and we know that technical analysis is the practical application of behavioral finance in the markets. If we can identify points at which we think prior sellers will turn into buyers or prior buyers turn into sellers, then you have, for chance, the behavioral shift or the makings of a behavioral shift. In dollar-yen terms, we kind of played with it again today, backed off. But if we can do this, then, yeah, you could get a shift in a lot of things. The S&P, the number we're focusing on right now, basis Friday closes, is 1222. We're still close. We're only 10 points away or so. It's not much. And it's not
1222, and we got 2 days to get there.
Right. And it's not a precise level. So if we close at 1224, I can say, oh, breakout. But if we closed Friday 1230, 1235, anything like that, then we probably have more to go. We're talking about targets in the 1255 to 1285 level in the S&P. And I was just hearing how Jeff Applegate's talking about, multi-year bull market. I can't necessarily agree. I don't think we're going to dip down substantially in anything close to the lows of last year when they said Morgan Stanley turned bullish on the lows of March 2009. But could we still be in multiple years of several hundred-point back-and-forth S&P trading ranges? Yes.
You say that the market has really taken a big change. That fundamental analysis and this idea of, buy and hold, that's been over for a while. If you want to make money, you got to kind of follow the trends, and the trends change pretty quickly.
Yeah. Now, it doesn't mean that they change. We're not talking about advocating being day traders or traders in and out in 2 weeks. But buy and hold has done nothing for investors for 10 years. Historically, when it's done nothing for 10 years, you typically have a decent time frame after that. But I think from all the models I look at, from the behavioral characteristics how I look at the market, we are likely in for years of back and forth trading, and therefore best to look at markets that way and not get married to stocks. And if you get, if you hit a triple or a home run on a stock, take it. Don't go looking for the grand slam. It's not likely here.
I think we'll take a double at least.
Doubles are great.
I want to thank you very much. Rick Bensignor coming to us, Chief Market Strategist, Execution Noble.